SPY, or the S&P 500, is slowing down on the sell side just as we approach the 200 SMA line. Today's price action on the daily chart closed as an indecisive doji candle. Indecisive doji candles have equal length in wicks in both sides and represent no winner during the session. The candle anatomy says the candle closes where it opens with no decisive winner. However, when formed at extremely extended trends, does signal a reversal to the opposing trend. So here's what I mean. We have a sell-off taking place all the way from 418 down to 393, and now you're starting to see all sorts of indecisive doji candles. From this overextended sell-off, these doji candles are going to behave as a reversal for prices to push back up. And you can see these candles from here. This is an indecisive doji. You can see it from here. You can see it from here. You're going to see it in all sorts of trend reversals, although their function is undecisive. So keep that in mind. Now, at the bottom support line of this newly formed bullish channel dating back to October, bulls must defend at all costs, showing demand presence just as they did in the recent rebound at the support trend line of the bullish channel shown here. So the same way that bulls stepped in over here, they must step in here as well, producing some green reversal candles and pushing prices back up. Now, this area is key because this is the third retest at the trend line. Trend lines have three stages, as shown from this chart. We have the first origin here, and then you have the second touch. The second touch is where you start tracking the trend line. This is when the price establishes the trend, and you're waiting for the third retest to happen for buyers to come in at the third retest where the trend line is confirmed. So if the trend line does hold here, then you should get a higher high move above this high structure in the 430s, because as I said, when you have a market that's in a rising uptrend, you're going to see a higher low and a higher high characteristic taking place over and over. The higher low is going to be the counter trend or the corrective wave, while the higher high is going to be the impulsive or the primary wave. So now we could say that we have another corrective wave coming back down to 393, retesting the 200 SMA line, as well as the rising trend line support, producing a higher low. And if we can get some buying momentum above 398, where bulls can produce a large green candle, we would anticipate a breakout above the smaller trend here at 400 and heading towards 407, retesting this gap fill left out here. For now, I just want us to focus on 407, but what I think is by the time we do get to 407, if they do get there, then they're definitely going to push higher above 415 as well, because that would create the urge to place the next higher high at 430s. Buyers, in my opinion, are there as shown from the wicks. This signifies buyers, this signifies buyers, the wick over here signifies buyers, the wick over here signifies buyers. Now that we know there is buying presence, what we need to see is bulls producing a large green candle pushing above 400, breaking the first line of defense from bears, and then heading towards 407, which would be the main resistance. So you have two trend line confluences here. You have the 200 SMA line, which would create an individual buy signal of its own, and you also have the rising trend line. Buyers, in my opinion, are there as shown from the wicks. However, it seems like there is still a little bit of room before major buyers step in, creating a strong bullish reversal candle. In this case, we would anticipate a break above the smaller trend line here at 400 towards the main target at 407, just where the leftover gap is. In bearish cases, we would need to close the next 2 days of this week below 393, where the 200 SMA line is, to trigger a major flush to the downside, retesting the previous bear market breakout line here at 387. And that retest at 387, would very well align with the recent support that took place back in January 19. However, by the time we do come down to 387, I think bears will have the momentum, bulls will have the massive pressure on them, and bears are going to over exceed bulls, pushing prices all the way down to the recent support at 377, especially after breaking this trend line and getting back in the main downtrend line that the bear market was trading in for the year of 2021. So for the entire year of 2021, we respected this trend line here. And if bulls get back below it, then this is very bad news, as that would signify major downturn. This could come in with all sorts of downside momentum, pressure from the recession, or if you get inflation going higher and higher. So, all right, everyone, that's all for today's video. If you did enjoy this video, please give it a thumbs up so it helps me with the algorithm. Subscribe so you can see more of these, and I am looking forward to seeing you all in tomorrow's video. Have a wonderful rest of the day.